Hello, welcome to Accounting Hub. I'm Professor George Scarpin, PhD in Accounting, and our topic today is the accounting equation. One of the most important topics in accounting. If we don't know what the accounting equation is, we don't know anything else. So that is why it's very, very important. And let's create a fake business here, Scarpin Web Service. So a business that performs an activity for a fee is called a service business. So we are not selling goods, we are providing service. A proprietorship is a business owned by one person. Me, Scarpin. A proprietorship is sometimes referred to as a sole proprietorship. A business plan is a formal written document that describes the nature of a business and how it will operate. Very, very important, especially for a small business. And for accounting, we have some standards and rules. And the standards and rules that accountants follow while recording and reporting financial activities are commonly referred to as a generally accepted accounting principles, or GAAP. Or GAPs, because it's more than one. And what is the accounting equation? Financial rights to the asset of a business are called equities. The amount remaining after the value of all liabilities is subtracted from the value of all assets is called owner's equity. I am the owner of $10,000 in assets, but I owe $2,000 to my creditors. So my owner's equity will be 8. 10 less 2. The equation showing the relationship among assets, liabilities, and owner's equity is called the accounting equation. Just like here. Assets, it is usually on the left side of our equation, is equal to liability plus owner's equity, right side amount. Remember, $10,000 of assets, $2,000 of liability, $8,000 of owner's equity. So assets less liability equal owner's equity. It is exactly the same as telling assets equal liability plus owner's equity. And why do we have this one? Why do we have this accounting equation instead of assets less liability equal owner's equity? Imagine a bunch of money. The money comes from somewhere. The money comes from either liabilities or owner's equity. And where the money goes? The money goes to the assets. So here, where the money comes from, where the money goes. That is why we have this accounting equation. So let's see some examples of transactions about assets and liabilities. So let's go to our Excel file. And remember, all our Excel files, they are free. And the link to download it is in our video description. So let's consider here a very, very new company. This is Scarpin Web Service. So no beginning balance. Beginning balance is nothing. Transaction 1, cash, receiving the cash from owner as an investment. And here, let me copy and paste this formula for all of our transactions. Here it is almost a live class. So, okay. So remember, assets equal liability plus owner's equity. So after each transaction, asset must be equal to liability plus equity. So receiving cash from owner as an investment. How much? Let's say here, let's add some numbers. $5,000. So where the money comes from? The money comes from the owner's equity. Jorge Scarpin, that's me. Oh, prettier now. equal Excel file, Excel class here equal B5. However, where the money goes? The money goes to cash, $5,000. So total asset equal total liability plus equity. Transaction 2, paid cash for supplies. I am the owner of the supply. So supply is another asset. So here, how much? Let's say $300. So supplies, $300. My owner's equity remains the same. We don't receive any additional money from Jorge Scarping, or we are not paying him anything else, so remaining 5,000. It is not balanced. Why not? Because we need to change our cash. Do we have the $5,000 yet? No, because we paid cash for supply, so equal 5,000 less 300. This is how we do formulas in Excel. And we can start our formula with either plus or equal. It is exactly the same. Okay, I prefer plus, but it's personal. And now, paid cash for insurance. Let's see here, $200. My cash has changed. I paid cash. So, for equal 4,700 less 200, 4,500. Supplies remain the same. So, equal our previous number. Prepaid insurance. Why it is a prepaid insurance? Usually, I pay insurance not only for today. I pay it for usually 1 year. So, I am the owner of this insurance for the 12 remaining months. Or I am controlling this insurance for the remaining 1,200. So, it is an asset. We will later explain in a specific video about how to account prepaid expenses or prepaid insurance or other assets like that. And our owner's equity remains the same. So these two transactions here, we are working only with assets. So our owner's equity is the same. We are not changing. We are only changing our assets, but not the total. The total remains in $5,000. Transaction 4, it is a little bit different, but supply on account. So we are purchasing but not paying it. Let's consider here 250. So if we are not paying it, our cash remains the same. Supplies, now we are purchasing additional $250. So 300 plus 250. Prepaid insurance remains the same. So now look at here. My total assets goes from 5,000 to 5,025. Does it mean that our owner's equity increases? No, because here what increases? The accounts payable, our liabilities, because we owe money to Canyon Office Supplies. How much we owe them? 250. And now our owner's equity remains the same. So 5,025. Transaction 5, the last one before we go back to our PowerPoint. Let me close it here. Okay, so paid cash. Let's consider that we are paying now $100. So we owe them 250. We are paying 100 now, and the remaining 150 we will pay later. So cash, we are paying. So if we are paying, we are decreasing cash. 4,500 less 100, 44. Supplies, remains the same. Here, guys, we are not purchasing any additional supplies. The purchase was on transaction 4. We are paying our liabilities. Okay? Prepaid insurance remains the same. And now, our accounts payable, we owe 250, but we paid 100. So, what do we owe now? Only 150. And then, owner's equity remains the same. So, $5,150 for both total asset and total liability plus equity. And when do we change the owner's equity? When we have revenue or expenses. What is revenue or expenses? The 6 additional transactions here. Let's come back. Transactions affecting owner's equity. An increase in equity, it makes us richer. It is called revenue, and it is resulting from the sales of goods or service. It's called revenue. On the other hand, a sale for which payment will be received at a later date is called a sale on account. We will check it soon, in some minutes, in our transactions. On the other hand, unlike a liability, which is an amount that is owed, the cost of goods or service used to operate a business is called an expense. And that makes us poorer. So we need to pay it, and we are decreasing our equity. Okay? And other cash transactions, assets taken from business for the owner's personal use, are called withdrawals. How does it work? Let's go back to our Excel file. Transaction 6, received cash from sales. For instance, $2,000. We are receiving it. If we are receiving cash, our cash goes up. $6,400. Everything else remains the same. Supplies, prepaid insurance, liability. However, it is increasing our owner's equity because resulting from the sales of good or service, we are selling our service here, so it increases our equity. So 5,000 plus 2, $7,000. Total assets equal total liability plus equity. Sold service on account to Main Street Service. Let's consider here $800. So, if it is on account, our cash remains the same. However, we have an asset here, the right to receive money, $800. So accounts receivable, $800. Everything else remains the same. So equal the row above us. But what about owner's equity? It is increasing our owner's equity. We are selling services here. So it is increasing. And I am not sure if we are increasing or not. My professor, they are making me feel in trouble. I have no idea. So a good tip here. Equal 7,000. Let's consider that it doesn't change our owner's equity. Our accounting equation is not working anymore. It is not balanced. Total assets, 7,950. Liabilities, 7,150. So yes, our owner's equity changes. Now our accounting equation is good. And now our expenses. So here our revenues. So here, summary of changes in owner's equity. What is changing our owner's equity? First, $2,000 here, $800 here. So transaction 6, revenue on cash, 2,000. Transaction 7, revenue on account, 800. Let's go back here. Transaction 8, paid cash for communication bill for cell phone and internet service. It is an expense because the cost of goods or services used to operate a business. We need cell phone and internet service to operate our business. So here, let's consider $350. If we are paying cash, our cash is decreasing. $6,050. Everything else is the same. What about now? Remember, nothing changes. Our account equation is not working, so it changes. 7,800 less 350. And guys, have you realized that all of our transactions, we are changing at least 2 columns? And yes, that is right. It is at least 2 columns. 2 or more, never 1 column. Because if we change only 1 column, our account equation will not work anymore. So here changes our owner's equity. So decreases in 350. Transaction 8. Transaction 9, cash for equipment rental. Let's consider here $550. Here guys, we are not purchasing it. So it is not an asset. It is just a money to operate our business. If we pay cash, decreasing our cash, $5,500. All other assets remains the same. And our owner's equity, oh, here are you? Owner's equity goes down. And here our owner's equity is going down. And now, received cash on account from Main Street. Remember, this service here, 800. We are receiving part of it, so we are receiving $300. So, if we are receiving cash, our cash goes up, 300. We don't have 800 on account anymore because we already received 300, so less 300. We changed 2 columns, so maybe we not need to change owner's equity because our changes here were the same number. We increase our cash in 300, decrease accounts receivable 300. So if we are doing math, our total assets will remain the same because we will keep supplies, we will keep prepaid insurance, our assets remains the same. If our asset remains the same, our liability and owner's equity remains the same. And no changes in owner's equity here. And Jorge Scarpin withdrew equity in the form of cash. I need to pay my mortgage, I need to buy food, I need to go to grocery store, so I withdraw $1,000. So cash 1,000, 4,800. Accounts receivable remains the same, supplies remains the same, prepaid insurance remains the same, accounts payable remains the same. Now we are decreasing our owner's equity. I, the owner, am withdrawing money. So decreasing in owner's equity $1,000. So the net change in owner's equity is $900. Does it mean that our income is 900? No. We will be talking about income later, but only to let you know here, this transaction 11, it is not an expense. It is just a withdrawal of cash. Why it is not an expense? Because the cost of goods or service used to operate a business. I, the owner, withdraw money to pay my personal bills. It is not cost of goods or service used to operate a business. So it decreases our equity. It is withdrawals, but it is not an expense. So if we come here, income or loss, let's call it. What do we have? Revenue. How much revenue do we have? 2,000 plus 800. Less expenses. How much? 350 plus 550. 900. And then equal to net income. It was not supposed to be on this video, but it is useful. Equal sum. Another way to do some formulas on Excel. $1,900. Why sum? We are decreasing because it is a negative number. So when we sum negative numbers, we are subtracting it. Remember? Algebra. Okay, guys, so that's it. I think we are done here. Yeah, thank you so much. And please, guys, subscribe our channel. It's very important to us. Like our Facebook page, Accounting Hub by Dr. Scarping. And questions or comments, leave it here or email me at jscarping@gmail.com. Have a very nice day and God bless you.